Today we're going to be talking about trading the SPY. I mean, this is the Spider 500 ETF that represents the 500 biggest companies in the world. It's kind of the overall market. Now, today we're going to be talking about how to do that with a very, very small account, even starting out with $100. Now, the great thing about the S&P is it's one of the most popular and liquid ETFs, okay? Like, you'll hear me talk about this. You'll hear other traders talk about the market, okay? When you hear the market, 99% of traders are talking about the S&P 500. Now, you might have heard of the Dow Jones, the DJIA, which a lot of people fixate on, and I think it's a non-ideal metric because remember, the Dow Jones is only 30 stocks, okay? Now, if you notice, they tend to kind of move together, the S&P and the Dow, but to me, if I want a snapshot of the overall market, I don't want to look at 30 stocks. I mean, that's just too focused, where the S&P 500 is my preferred indicator for the overall market because it's the biggest 500 companies in the stock market. And because of that, it's also way more liquid than the Dow. So it's high liquidity and tight bid and ask spreads, making it an ideal candidate for day trading, even with a small account as small as $100, okay? So remember, kind of before we get started, I do need to set up some terms. Remember, day trading involves buying and selling the same stock or ETF in this example within the same day or maybe the following day. Think of day trading as basically entering and exiting a position in less than 24 hours. Like, sometimes you may be buying into the close, but if you do that, typically you're selling the next morning. So traditional day trading, we think in and out the same day. But for me, I think it's a little better to think of it that way, because again, especially if you're under the pattern day trader rule, many of you may be under the PDT. It's the dumbest thing ever. The terrible regulation. As always, the government screws everything up they get involved in. But if you're under the PDT, you know it can be kind of difficult to day trade during the day because you only get those 3 trades in a rolling 5-day period. What's great about trading into the close, it allows you to hold the stock overnight, and now you can day trade without using those PDT trades. Hopefully that makes sense. By buying into the close, exiting the next day, you don't use up your 3 trades. So that's why I always expand it to those gappers, as we call them, or that 24-hour window. Because to me, if you're day trading out of the PDT and you're not looking for gappers or late day trades, you're really hamstringing yourself. Because a lot of the times you might use all 3 of your trades in 1 or 2 days, then you have to wait 3 or 4 days to get them back. So remember that, 24 hours. So with the right strategy, even a small account like $100 can be effectively utilized to make trades, focusing on ETFs and stocks like the S&P for their high liquidity and volatility. Here's a general approach that traders might use to aim for significant returns. Keep in mind that all trading involves risk and there's no guarantee of profit. You can leverage margin trading with caution, okay? Always use margin with caution. If you're under the PDT, that means you have a margin account, okay? And if you have a really small account, you do have to probably leverage some of your gains with margin, okay? Now, please be very, very careful and bulletproof in your risk management, because while we love leverage and margin to increase our gains, remember, a lot of traders overlook the fact that margin, it's a double-edged sword. It cuts both ways. It amplifies your gains, but never forget that it amplifies your losses too. That's why if you're trading on margin, you have to be absolutely ruthless in your risk management. So leverage involves borrowing money to increase the potential return of investment, okay? Like I said, but it increases the losses. Margin trading is a form of leverage that allows traders to borrow money from their broker and to trade higher priced stocks and ETFs like the S&P. Now, traders might use leverage to amplify their trading capital, allowing them to purchase more shares than they could with that $100 or that small account on their own. However, while leverage can magnify returns, also increases potential losses, so it must be used judiciously. Now, a great way to trade the S&P is to focus on swing trading, okay? So day trading, remember, that 24-hour or less. Swing trading is days or weeks. Now, if you know the right patterns and the right approach to swing trading, you can make day trading like gains in a few days or weeks. And listen, if you can make 20, 30, 40, 50% on a swing trade in a few days or weeks, I hope all of you'd be happy with that. Now listen, we trade stocks that move 100, 200, 300% in one day, but I would hope you'd have realistic expectations and appreciate the fact that 20, 30, 40, 50% in a few days is also very solid, especially for newer traders. Now, swing trading involves holding positions for several days or weeks to capture price movements or swings in the market, okay? Traders analyze charts to identify patterns, trends, and potential reversal points in the S&P, like buy-in dips on the S&P. Oh man, like if you look at the long-term 20-year chart of the S&P, like bring that chart up some point, and you'll see like a ridiculous trend, even through crashes like the market crisis and back in the dot-com boom. When you zoom out, those are just little blips, but the trend is literally lower left to upper right. So buy-in dips, absolutely incredible trading strategy. And by entering trades at the beginning of a price swing and exiting at its conclusion into resistance, traders can aim to capture significant price movements outside of just trading the penny stocks, okay? Now, scalping is also a strategy that involves making numerous trades through the day to profit from small price changes. We're just looking for small blips here and there. It is a very active trade strategy. Like if you're under the PDT, never try scalping, okay? Now, if you have a cash account or you're over the PDT, love scalping as a way to recognize quick, easily identifiable price movements in the short term. And traders can use scalping with highly liquid interests like S&P because, again, you can get in and out in seconds and take advantage of those small price movements using technical analysis to key off of support and resistance levels. Now, the strategy requires a significant time commitment, okay? If you're scalping, you can't walk away. You need to be in and out of these positions very quick, but if that works for your schedule, love scalping the S&P. It's probably the best instrument out there to scalp. Next, options trades, okay? Options trades involve buying or selling option contracts that give the right to the trader, but not the obligation, to buy or sell the underlying asset at a specified price on or before a certain date, okay? Options can get a little complicated, but if you study, we have a ton of videos, a lot of great books out there, etc. A lot of newer traders overlook the power of options. They get a little confused, but if you keep it simple and just use option strategies such as, buying calls or puts, avoid the spreads and the straddles and the flying condors and the iron butterflies, just buying puts or calls, it gives you a great way to speculate on the direction of the S&P with a relatively lower capital outlay compared to buying the ETF outright. Options can provide leverage and very clear risk management. So don't overlook all of these potentials. So that being said, my friends, start studying the S&P, okay? It is one of the most liquid instruments out there, and especially if you're looking for exposure to bigger market moves and bigger market trends, it should not be overlooked. And you can swing it, you can day trade it, and you can scalp it. So if you want to learn more about these chart patterns and entries and exits, and I mentioned a lot of technical analysis, what I'd like you to do is visit a free link below that goes to a Daily Income Trader System webinar, okay? And that webinar is 100% free all day long, even on nights and weekends. You click that link, check that out, and you can see a full tour over an hour long breaking all of this down. Listen, I love YouTube, but at the end of the day, this is a 10-minute video. I can't teach you all about trading the S&P in a 10-minute video. You check out that 1 hour tour live, you can get a lot more information and you can learn how to join the Daily Income Trader System. Click that link, 100% free, 100% live, all through the day, even nights and weekends.